Nifty in rules and setup. Friends, I have not been active on this channel for a couple of trading sessions. I'm sorry for that. Had some other commitments and other issues which had to be tackled. So let's get back to the channels, Trading Nifty in rules and setups. And today in this video, I shall be giving you a brief on how to analyze the month of October, where I'm expecting Nifty to move in the month of October. So now, friends, if you see on a bigger time frame, on a monthly time frame, the market is in a consolidation zone. It is forming a pole and a flag pattern. It was on the uptrend from March 2020 till October 2021, and after that, it is in a purely consolidation zone on the larger time frame. And at the midpoint of this particular consolidation zone, it has either taken a support, or it has taken resistance, again a support. Now, friends, within this particular flag, there is one more pole and flag that's formed on a daily basis. Now, this is on a daily basis. If you see here, again a pole has formed, and now it is on a flag. And here also, if you see on the midpoint, from the midpoint of this particular flag, the market has either taken a support, or now once this midpoint broke, it has started taking it has taken resistance from here. Now, so what I'm saying is that we are in a consolidation zone, and if there is a breakout of this zone, then we will see a substantial upside going forward. Okay. And friends, market is meant to move up. So definitely, I don't see a breakdown further, but I do see a breakout from here, and we'll have to wait for that. And that breakout will be as big as this particular breakout. When that's going to happen, I do not know, but it is going to happen. The longer the consolidation, the longer the base, the bigger the building. Okay. Now, having said that, friends, I have also done one more data analysis, and that is the 31 years, every month from 1991, every October month, I have plotted the open, high, low, and close of the candle size, and the percentage movement. From 1991 till 2021, so 31 years has been plotted. And if you see here, and then I've done analysis of that, and what you see is in the month of October, the volatility has been quite big. There has been big movements that you have seen in the month of October, somewhere around 12%, 43%, 14%. And if you just summarize it, then in the month of October, 3 to 4% movement has happened only twice, in 2012 and 2016. 4 to 5% has happened thrice, which is the 10% probability, and in 3 years, and there were 2 reds and 1 green. 5 to 10% movement, that is the candle size, has happened 13 times, and above 10% again 13 times. So there is a 42% probability that this month also the candle size would be in the range of 5 to 10%. Now, when you say 5 to 10% today, the candle size is 573 points. And if I go to 5 to 10%, then I'm looking for the candle size to be 1686 points, which is another 1,000 points movement of the candle from today onwards. So currently it is at 3.4%, and therefore now let's go to and understand what can happen. Now, for that, friends, what I've done is that I've also done a little bit on this chart, and that is I have plotted the high and the lows from where the market has either taken a support, and the high and the lows from where the market has taken a resistance. So now, to understand the max high that can go, I've taken October 21 low, December 21, October 21 low, October 21, October 21 low, December 21 high, February 21 open, and so on and so forth. And when this is done and an average is taken, the max high that I see, max high means if the candle if the size is to be in this range, if the size is to be in this particular zone, that is 4 to 5%. So this is the max high, 4 to 5%, and which is a 6% probability. So 10% probability. If I have to achieve the 10% probability, if that is going to happen, then the max size of the candle should be around 800 points. And therefore, the max high can be 17,550 and the max low can be 16,750. Good point. Now, next. Now, friends, let's go back to our chart. So I have plotted the 16,750 and the 17,550, and I'm expecting that if it is in the range, if it's in the 4 to 5%, it will be within this. But friends, now let's look into the chart a little bit differently. And here you see a chart which is with the trend lines. Okay, the one trend line that I have drawn is the longer time frame trend line on a daily basis from the low of March 2020, which is the low of March 2020, till this particular high, this particular low, which is the low of June 2022. So this is the mother trend line. If the market, I'm not expecting the market to break this particular yellow trend line. In addition to that, there are three more trend lines, and that is from June 2022. If you see, the market took support on this particular black trend line. Took support here, took support. But the moment it broke this trend line, you see the fall in the market that happened. Clear? Then after that, the market took a support from the midpoint of the flag, of the bigger flag. The yellow line is the midpoint of the bigger flag. Okay. And from there, it took a support. So there also I put a support line, and this is my trend line for the support. It went up. And then if you see, friends, that there's one more trend line that happened in between from where the market is taking resistance. And today, on 6th of October, the market has taken exactly a resistance from the midpoint of the internal flag, and this particular line. So this 17,424 becomes a big term resistance point for the market and this trend line. Okay. Now, friends, having said that, what can I expect from the market? Now, here, this is something very, very, very interesting that I want to show to you. Now, let's see what the market is doing now. For that, what I'll do is I will take the market has moved from up to down here. Here, it has gone up here. Now, if the market has to form a W pattern, then it should come down, touch this particular trend line, and then from here, again go up and touch here. So, this is one scenario possibility. This is one scenario possible, that the market will touch 16,900, and then from there it will go up and up to 18,082. Now, this is what I have plotted here in my analysis scenario. This is a scenario 3. Scenario 3, 17,102 opening, high 18,094, low 16,909, low 16,855. This will be the low. So here you see that a 7.35% movement, the market would be green, and it's within the 5 to 10% bracket, which is the 42% probability. It meets my criteria. Okay. The second scenario can be, it doesn't form a W, but what it does is that it forms an N pattern. Now, what is the beauty of an N pattern? The first leg of the N is this. The second leg of the N would be this. Wait. Second leg of the N, let me draw here. Is second leg of the N. And then the third leg of the N. Now, friends, remember one thing. The third leg of the N pattern, is equal to the first leg of the N. So this is the first leg of the N, and I copy and paste it, and this will be the second leg of the N. The second, and if an N pattern is found, which will be confirmed if the market breaks 16,750 and closes below that, or if the market does not stop at 16,900, then the second leg of the N pattern would be confirmed. In that case, the market can go down way up to 16,075, 16,065, which is also the final gap, because there are three gaps here, one gap here, one gap here, one gap here, before all the gaps are closed. There are still three gaps to be closed, and this is the final gap. This can also be a probability. So this also I've plotted here. Scenario 2. So 17,102, high is 17,428, low 16,065 red. Again, 1363 point is the candle movement, 7.82%, 5 to 10%, probability 42%. So yes, this can also be a probability. And obviously, 10% probability can be that the market remains within the zone of 17,550 and 16,750. So how to trade the month of October on a monthly basis? When I say on a monthly basis, it basically means that I'm not going to buy, I'm going to sell a monthly option. This is what I have plotted, and I'll keep it in front of a screen. Near 16,900, sell 16,800 monthly put, but exit if the market on a daily candle closes convincingly. 50% of the candles should be below 16,750, which should be confirmation that the market is forming N pattern and not W pattern. Since this would be selling of monthly put, and if the market goes below 16,750, then the loss would be around 50 points. That can be bearable. Now, second is, this was on the expectation W pattern. The second is on the expectation of N pattern. If the market falls below 16,750 and closes below it, again 50% of the candles should be below 16,750, then sell 16,800 monthly call and keep an SL of 50% of the premium. If this is hit, then exit the trade. In this scenario, I'm expecting the market to form an N pattern. That's all from my side, friends. Friends, I've reactivated my Telegram channel. So you can comment on that. You can join my Telegram channel, which is there in the description box. If you like my analysis, please like, subscribe, and also share my channel. Friends, after this video, I'll also be giving the daily video and a trailer on the next level of data analysis, let's say. So thank you very much, friends. Sayonara. Cheers. Bye-bye.